Hey everyone, welcome to Earnings Call. My name is Jeffrey Beamer. I'm the Senior Investment Strategist over at ewotrader.com. If you're not familiar with our show here, we talk about earnings announcements around stocks and not just about the numbers. We specifically talk about how to profit on earnings announcements and the stocks that have the upcoming earnings announcements. So last week we did a trade on Dave & Buster's. We're going to take a look at see how that stock did. It's a little underwater, which, hey, we haven't had a trade here that has been underwater yet, so I'm happy to discuss that with you today. And this week we're tracking over 117 stocks. Yes, the week before Christmas, we're talking over 117 stocks, but we're going to focus on specific stocks that are either going to make big moves or are going to consolidate through their earnings announcements. And don't forget, because we're talking about several stocks through the show, we have a chapter feature at the bottom of the video where you can just jump to the specific stock to hear the little snippet that we do about the stocks each and every week. So here we go. All right, so we do have earnings coming up this week. Yes, the week before Christmas. There is actually over 40 stocks that I'm tracking this week specifically, and I've narrowed down some of the best candidates for both potential breakout and for potential consolidation. And you can see here that on the left-hand side of the sheet, we have the breakout stocks. And on the right-hand side of the sheet, we start with the consolidation or quiet stocks. Let's talk about those quiet stocks first, because we actually have a publication that we do each and every week called Delta Neutral Income. And that is where we focus on these quiet stocks that have earnings, and we look to sell premium around those. So what does a quiet stock look like? Well, we have a consolidation stock like Yum Brands. Now, this stock does not have earnings this week, okay? This is just highlighting the recent earnings announcements. You can see the vertical red line identifying earnings and then the little ellipse that indicates the movement of the stock. And you can see that, yes, even the stock gaps around a little bit on the earnings announcements. It just doesn't move very much at all, just a few percentage points, single-digit percentage points. So with these, we like to do selling strategies like iron condors, or butterflies, something like that. Again, those are specific option strategies that will generate income over a short period of time. So let's take a look at our sheet this week for quiet stocks here. And it begins tomorrow with Heiko, and then we move Wednesday to General Mills. In fact, let's look over at the chart, at my chart, and let's talk about these. We have General Mills declaring on Wednesday, the 18th of December, before market open, and the estimated move here is about 6%. Okay, and you can see in the past, I don't have the other earnings announcements identified, but you can see maybe a little volatility around here in September. That could have been the earnings announcement. You can see that consolidation move right there. It's just not really doing much. And again, single digit moves for General Mills. So this would possibly be ideal if we can get decent pricing on the options for a selling type strategy like an iron condor or a butterfly. All right. The next stock I want to show you is Lennar, because this is a home builder, and the home builders, boy, they're taking it on the chin right now because we've had a tick up higher in interest rates, and the home builders really reacted. And what's great about this, as far as our strategies go, as you can see here, that this stock, Lennar, announces on Wednesday, December 18th, after market close, the expected move is less than 7%. And what I like to see is when a stock does move, you can see the stock has dropped from 170 to 152 in about 2 weeks. Actually, that's a pretty big move. So through earnings, it may have gotten the move already out, if that makes sense. So it's taken any potential big move kind of out of the equation. That sometimes happens. Doesn't happen every time, but you can see I have it identified here on the last earnings announcement. It was expected less than 7%, and the stock only moved 5.33% on that move there. I can show you that data. Let me zoom in on it just a little bit, and you can see that little gap down. That was only a gap down of 5%, and we're expecting the same thing, even though the stock has moved pretty significantly here. So this one I might sit on the sideline for, but we'll see. It depends on the option pricing as we head into that earnings announcement. Another quiet stock for you is ConAgra Brands. And what's interesting about this stock is you can see the last earnings announcement clearly right here. This did exceed the expected move. This happened to be about a 10% move on the stock, and it did not work well for the selling strategy. But ironically, with ConAgra brands, is that this thing actually does consolidate most of the time. So now that it's got its one big movement out of the way, we're still looking for a single digit move on ConAgra, and the symbol here is CAG. The announcement is Thursday, December 19th, before market open. And again, we're looking for single digit moves of around 7%. And the last consolidation type stock I want to show you and talk about today is on Carnival Cruise Lines. All right, CCL is the symbol here. Now, this stock, again, look at this move. It has rallied very nicely here, but we're only focused on the earnings announcement, okay? This is a $26 stock. Not really ideal for an iron condor, but again, it depends all about the option pricing and where the market makers put the pricing. We expect to move less than 10%, in fact, less than 8%. So this might be ideal for that type of consolidation move where we're selling. And the reason we sell premium here is because implied volatility is high going into these earnings announcement. That makes options very expensive or more expensive than usual. So we like to sell those around these quiet earnings announcements. All right. So just to recap, that's our quiet list for today. And now I want to talk about the breakout stocks. All right. So let me tell you, these are the ones that get really exciting. They tend to move big. This is an example of a breakout stock. This is Shopify. It's a stock that's usually on our list as a breakout stock. And you can see around those ellipses, look at how the stock gaps around those earnings events. Big potential moves. And oftentimes this moves more than the expected move. And therefore, we can profit with trades like straddles and strangles. Now, these two strategies we do in our delta neutral breakout portfolio. Okay. And again, we have some great candidates for you this week. Let's begin with our first candidate this week. We're looking at Jabil. All right. Jabil Circuits, it used to be, now it's changed its kind of consolidated its name, but this is not a consolidated stock. This stock announces Wednesday, December 18th before market open. And you can see the expected move is greater than 13%. All right. Now, last earnings announcement, take a look at this. The expected move was greater than 10%. And the stock moved higher by 13% during the day, closed 11.65% at the end of the day. So the key here is to get your pricing with the stock consolidating going into this earnings announcement. That's actually a really good look for a potential breakout stock. And if you can get pricing on the option there under 10%, meaning the estimated move that the market makers are looking at is maybe 8 or 9%, this is a good candidate because historically it moves double digits over 13% on average. And last time I priced this out, it was actually 9% was the expected move going into earnings. So a good potential breakout stock there. And next I want to look at, let's look at Toro. Okay. TTC is the symbol. TTC. All right. This is an $87 stock. And again, a potential breakout of greater than 13% is the estimated move. This stock has earnings on Wednesday, December 18th, before market open. And you can see the last earnings event. Yes, it's very clear here. This big gap down that it had in September. And then in June, look at this. This is the earnings event right here on this day. Big move higher. And then 2 days in a row. Boy, identical candles 2 days in a row. So Toro is a good candidate. It will move big around earnings, typically greater than 10%. This time we're looking at possibly greater than 13% on Toro. Okay. Now Micron comes up next. All right. This stock is getting a little bit of notoriety right now. Let's see for Micron to pull up here in just 1 second. Okay. Got the little circle of, there we go. Micron Technology. It's gapping higher today. It's up by 6.86%. Now, you can see the consolidation move right here, but this stock doesn't have, I don't have my banner on there. Let me pull up and verify. Earnings on this are Wednesday, I believe. Let's see here. Yes, Wednesday, December 18th, after market close. Sorry, I don't have my little banner on there. So this Wednesday. Now, what I don't like about this is the stock making this type of move today. Okay, this consolidation that the stock had over the previous several days, this chop right here. Okay, this is perfect going into an earnings announcement for a potential breakout. Now, Micron has an estimated move. I'm just glancing at another screen here, greater than 13%. Okay, definitely greater than 10, and that's where pricing usually comes in on these, is sometimes around that 10%. And boy, when you see that, that's a good opportunity to get good value on your trade, on your straddle or strangle, and then you're looking for that breakout. And for Micron Technology, the average move here is around 13.6%. So that would be good value if you can get the pricing on Micron Technology. Two more for you today before we move on to our trades. All right, so we have FedEx coming in here. This announces Thursday, December 19th, after market close. The expected move here is greater than 12% for FedEx. You can see the last move here. It had an expected move greater than 11%. And look at this. The actual move was 15.23%. So FedEx comes in usually with a lot of volatility. The average move right now on this is 13.89%. So this comes down to the value of the options. Now, I can tell you, FedEx being a $284 stock right now, this is going to be an expensive trade. I would not doubt that the straddle or strangle is up around $2,000. Okay, so this would be good for higher value accounts, something greater than $40,000 on your trading account. If you have a higher dollar account, FedEx is a good stock for you. If you're trading with a smaller account, maybe $10,000 or so, this is not the trade for you on FedEx. You can watch it definitely, but I would not risk over 20% of your portfolio. If the trade is over $2,000, well, that's 20% of a $10,000 portfolio. You don't want to do that. And lastly, we have Nike here. Nike is just a $77 stock. This would be more affordable for a smaller account, and I'll be showing that to you in the trade of the week here in just a moment. Okay, and this stock announces on Thursday, December 19th. After did not identify. Let's see, are we before market or after market here on Nike? Let me just double check. And we are after market close on Thursday. All right. So expected move greater than 10% on Nike. All right. So as we kind of show once again the list of stocks that we have upcoming this week, this is our focus, is just on this handful of stocks really this week for both of our publications. All right. So we have Jabil and Micron, FedEx, Nike. Don't be surprised if they appear in our Delta Neutral Breakout portfolio. On the other side of the ledger, we have General Mills, Lennar, and we have stocks like Carnival, Winnebago, Darden Restaurants. Those also may show up. Okay, I didn't really highlight all of those like Darden or Winnebago or FactSet, but that doesn't mean that they're not great candidates. On this sheet is really showing you the best possible candidates out of those 47 that I kind of am looking at this week. All right, these are some of the best. So speaking of trades, let's take a look at our trade that we did last week on Dave & Buster's. Now, Dave & Buster's typically is a big mover around us, but what happened in this case is that the option pricing was extraordinary. The market makers were pricing in almost a 16% move for the stock. Okay, so what we chose to do on Dave & Buster's, and the symbol here is PLAY, P-L-A-Y, all right, is that we were going to do an iron condor and we were going to sell into that. All right, now I'm just glancing up. All right, so what happened was, let's take a look at what happened. Well, the option market makers got it right. And hidden behind that little ellipse there, that red ellipse, is that big candle that happened on earnings day. This stock did drop 20%. So probably a straddle or strangle would have worked. All right, but our break evens in this trade were very wide, and our lower break even in the trade is identified by that light blue horizontal line that is just above my red drawings there. You can see it's kind of hard to see, but it's a little light blue line. That is our lower break even. And then today, okay, yesterday, the stock started to rally, Friday, the stock started to rally off those lows. We stuck with the trade. Today, we're up even higher, okay? And you can see that if we have another day like the past 2 days, meaning Friday and today, we could be back above our break even in the trade. All right. So this has not chased us out. We have a loss right now of only $120. Okay. And while I don't like losses, it's not part of my thing. And in this show, believe it or not, we have not had a loss here, and I can't remember when. Okay. We're facing that right now today, but who knows? In 2 days, tomorrow, maybe the next day, we could be back into profit on this particular stock. All right. So let's jump now let's take a look at what we have for this week. So we're holding on to play right now. Okay. And we will be out of it by this Friday, no matter what happens. So watch your risk in the trade. If stock starts trading lower, that's when to get out of it. If it shows any type of weakness, I would definitely manage your risk and exit the trade. All right, so let's get into this week's trade. This week's trade, we're looking at Nike. As I mentioned, this is a great trade for accounts of all sizes, especially if you're $10,000 or above, because this trade is coming in at a debit of just around $600. That would be 6% of portfolio. Okay, now while that is normally bigger than what you might trade with a good trading plan, the fact is that the stock is probably going to move, and let's say it moves half the amount that it's going to move, we may only lose 2% in the portfolio, maybe 3%. Okay, but we don't think that way. We manage our risk, but we need to have positive expectation. And this is good value here with the estimated move being over 10%, and this coming in right around the 8-9% range. Definitely a good candidate for us going into earnings this week. All right, so the perfect consolidation this week here on Nike, and then we expect a big move. Now, here's the thing. This is the week before Christmas. So if you like this show, well, please give us the thumbs up and favorite it, and come to see us every week, because we talk about earnings each and every week. In fact, I would love for you to download our free guide where I address in this issue straddles, okay, and strangles. It's at ewotrader.com/straddle. That would be my little Christmas gift for you. Now, because of the holidays and because of the low number of earnings that are over the next 2 weeks, we won't be coming to you until the beginning of the new year. So look for us to come back on Monday, January 6th. After the new year, we will be back with fresh trades, fresh analysis each and every week. And really, earnings start to get cranked up by about the second or third week. So we do have earnings the week of the 6th, but then the next earnings cycle begins the second week. All right, so we have some big names coming up in January. I've already been checking them out. You'll want to watch. Okay, a lot of financials start coming out in early January. All right, and we want to be paying attention to those. So everyone have a Merry Christmas, Happy Holidays, Happy New Year, and I will see you January 6th. Take care.